What's up, everybody? Nigel here from NigelShort.com. Today, I have a quick and sweet and short video for you. Basically, the question is that when do we buy the dip? Do we buy the dip? Should we buy the dip? Right now, as the markets are correcting or slamming down because of the Fed increasing their interest rates or the Russia's invasion into Ukraine, the petrol prices are going haywire, food prices are going haywire. Is it time for us to panic? Is it time for us to buy the dip? If recession is coming, meltdown is happening, what should I do? If you look at Bitcoin prices has dropped as low as 19,000 this week itself. Was it last week? This week. And the S&P has been dropping as well. Has been dropping about maybe 13% this year. So is it time to panic? What should we do? Should I or should I not buy the dip? Short answer, it's time in the market, man. We're not trying to time the market. It's the amount of time we stay in the market that matters the most. The short answer and simple answer is that just invest as normal, dollar cost average into it as normal, carry on with life as normal, right? So this S&P index from the year 1983 to 2013, according to this slide, right? If you stay in the market all this time, that means you do not buy, sell, you do not sell and buy, trade whenever there's something happening, you have the best outcomes. This we're talking about 8.4%, right? However, if you try to time the market, just if you miss 5 best days, instead of having 8.4%, okay, your returns drop to 6.85. If you are more unlucky, you miss 10 of the best days. Instead of making 8.4%, you make 5.8%. If you miss 20 best days, you make less than half of just staying in the market, right? If you miss 25 of the best days, you only earn 3.33% as opposed to just stay throughout, hodl on and having 8.4% per annum. So what I say over here is that investors often make the mistake of trying to time the market. I'm not that smart. I'm not going to time the market. Yes, if the price goes down, I have a bit of money, I'll throw a bit more in, but it's just life as usual. I'm just going to dollar cost average as usual. Nothing changes. The most important thing is asset allocation, diversification, and rebalancing, right? So what does Warren Buffett say about this? Warren Buffett, the man, said that price is what you pay, value is what you get. So he says, I like buying quality merchandise when it's marked down. Basically, if something is usually worth $1,000 and the price drops to, let's say, instead of $1,000, it's $500, I'll buy more. So back to the question of should you buy the dip? Should I buy the dip? If the company is fundamentally sound, if the software company, the whatever company is fundamentally sound, it's earning money, is operating well, and it's just a discount, hell yeah, I'll buy. Okay, right? So because like Warren Buffett, I like buying quality merchandise when it's marked down. It just makes sense to me. So should you buy a dip? Yes, I would say you buy the dip. But of course, first prioritize your usual dollar cost average. That means you should be investing every single month, or every 3 months, or every week, whichever is your framework. If you got extra money, then you can just do some select buying, or you can buy across the broadly, right? Buy the dip, all the way down, all the way up. It's business as usual, right? For me, like I shared in a video a couple of days back, my first million wealth formula, right? I'll be spending most of my time over here. Wait, let me just highlight this. Oh, I can't highlight. Damn it. Anyway, most of my time we spent in the active income column, where I'm focusing on my business to keep on growing it bigger and larger, more profitable, more revenue. And then I'll take all the surplus to invest into the defensive portfolio and the a bit more high risk portfolio. It's just business as usual. Whether market up, market's down, it's the same. And that's what I'm going to do. That's all I have for you today. So if you're thinking whether should you buy the dip, dollar cost average as usual, okay? It may go down some more because the Feds are going to increase the price, increase the interest rates, right? We do not know what's going to happen with the war. I'm rooting for Ukraine, obviously, and things we do not know what's going to happen. So just invest regularly, dollar cost average in, right? And then keep growing your side business, keep growing your career, keep growing your job, keep growing your side hustle, and it's business as usual. That's all I have for you today. Take care. Bye.